Hello and a warm Collisions YYC. Welcome to my guest this morning, Mr. Conor Chell. How are you doing, Conor?
I'm doing well, Tyler. How are you?
Good, man. It's been a while, returning guest, and I was joking off air. I don't know, man. Am I getting old? I'm like, I thought it was 6 months ago. It was a year and a half ago. You and I chatted. So, cliche, time flies. When you're having fun, maybe. I guess you have had some significant moves since our last conversation. We went down a deep chat, the history, the impact. ESG on the impact on the energy sector, your kind of journey. I'd love today to go down, a little bit. Let's talk about your new role. National leader, ESG, legal risk and disclosure at KPMG. And then let's talk about, news and noteworthy. So congratulations on the move. Talk to me a little bit about, the motivation behind it and what you guys have spun up there at KPMG.
Yeah, thanks. Thanks very much. We've been at KPMG, myself and my team moved over January of this year. It's been wonderful so far. In full transparency, I'm an environmental lawyer by trade, so landing at one of the world's largest accounting firms was never really on my radar.
I appreciate you calling that out.
Yeah, to be perfectly honest, but that's kind of the way the world is going in some respects.
It puts a good spotlight on the importance of and why that would even happen, right? Where maybe 5 years ago, no one was even having that conversation. I'm picking a timeline. Maybe it lasted maybe more than 5 years.
Yeah, no, that's exactly right. So I guess just in terms of the motivation, the practice that we've built, and that we talked about last time it's a bit unique in the market in that we blend kind of legal and technical advisory services all into kind of a front to back, cradle to grave sustainability service offering. So we were trying to cover as much ground as possible. I think we did a good job of that, being at a large regional firm prior. But there were certain limitations there as well, mainly from the technical perspective. Things
of
like
just what you had actually just raw access to the technical talent.
Yeah, that's exactly right. And I had built, a number of channel partnerships and a wide network and that sort of thing. And I was making referrals back and forth to different, kind of partner organizations, formally and informally. But at the end of the day, the feedback I was getting from clients is, they actually didn't really like that all the time, because when you transfer a file over to a new service provider, there's some onboarding that goes on that's required, and then there's a bit of a loss of institutional.
The argument can be that it makes it harder for them.
Yeah,
when we're all running 100 mile an hour, the less friction I can create in my engagements, the better.
That's exactly right, Tyler. So that was the feedback we were getting from clients. In my mind's eye, when I developed the practice, I thought they would love that, right? Like they could just come to us, and if we couldn't do it, we could refer them to someone who could. Good in theory, but it wasn't as good in practice. So that was part of the reason in coming to KPMG. And then as well, just access to top tier clients, KPMG being the firm that it is, and just kind of its large reach.
Needs no introduction.
Yeah, that's right, especially here in Calgary, and a great reputation, very, very conservative, very risk averse, but just a kind of a trusted advisor, generally from the firm's perspective.
Was this something they were working in, dabbling in? Did you come in to upskill it, or was this a net new, we're going to put a new kind of sub logo on the door kind of thing?
Yeah, good question. I think it's a little bit of both, honestly. There's been a real focus on sustainability and ESG advising and consulting in a variety of different disciplines. So KPMG has been on top of that for a number of years, and there's some really we've got a large team, really talented complement across Canada here in a variety of different disciplines. So that was already well established, I would say. The net new piece that we bring is kind of that legal component. And you and I talked about this last time, as with anything, it's a function of timing and good luck and hard work, I think. So there's a combination of all those things, maybe not in that order.
Good work comes at the beginning, and it comes again at the end, and it comes in the middle.
Yeah, for sure. So, just touching on the things that we talked about last time, there's a real appreciation, I think, in the market that mandatory ESG reporting and ESG regulation in general was kind of the next big thing. So that's basically how we built our practice, was to help companies prepare for that. KPMG saw what we're doing in the market and basically said, hey, we like the service that you're offering. What would it look like if you were to come over and we'd join forces basically. You'd bring your practice over. So yeah, a variety of discussions ensued.
Yes, I'm sure there was one or two discussions.
Yeah, maybe more than that.
Some late night soul searching, some more conversations, some spreadsheets. Yeah, absolutely.
Yeah, no, absolutely.
Yeah.
As with any move like that, right?
Yeah.
A lot of thought, a lot of consideration, lots of conversations with kind of my family and trusted advisors and my team and everyone else. But ultimately, we decided, this was kind of the best move for us. And yeah, it's been wonderful. We hit the ground running. There's been a bunch of developments on the legislative front that have really pushed the practice forward.
I'm curious to get into so it's been a year and a half, and in the world you live in, that's almost a decade worth of change, I would imagine, to almost maybe overstate it. But let's even just pick up from where we left off last time around mandatory reporting and where that's coming in the cycle, the timing from, obviously you're a big multinational, publicly traded, and then how that's working its way down the chain of events to the everybody bucket that I know that it's headed towards.
Yeah, for sure. So won't spend too much time on the mandatory reporting side, on the securities front there, Tyler, because I think that's been well canvassed. Lots of people are pretty aware of that. The Canadian Sustainability Standards Board, their work continues. Ultimately, what will happen is the Canadian Securities Administrators, based on the advice of the CSSB, my personal opinion is that they're likely to adopt some form of mandatory sustainability, mostly climate-related financial disclosures. So they're working off those international standards. There's the general sustainability standard and then a climate-specific one. In Canada, I suspect at least we will get, either the entirety or part of the sustainability-specific standard that'll be adopted into law. The timing there is still, a bit uncertain. There's we're obviously impacted by the American market, and their rule was released, and it's going to be subject to litigation and that sort of thing, because there's real politicization and polarization of sustainability and ESG in the U.S. particularly. So that'll have an impact potentially on timing here in Canada as to when mandatory reporting happens. But it's already happened for the federally regulated financial institutions, so banks and insurance companies. OSFI B15 is in effect. So those organizations are impacted directly, as are their customers and clients.
Well, that's the interesting one, right? Because each one of those has so much exposure to so many different portfolios of types and styles of sizes of businesses across the country.
Yeah, no, that's exactly right. So they already have that direct reporting obligation, and then any organization that has any sort of financing vehicle, as an example, or they have an investee who's an institutional investor, they're impacted almost as though they were directly impacted, because the banks and the insurance companies, they require that information for their own reporting purposes. So increasingly they're going out to the market requesting, or demanding rather, that same information from those in their portfolio or those that.
And does that, like, if I think about the customer journey, I get that call. Do I call you next? Like, I get the call of like my bank or my lender or my financial partner just demanding XYZ, and I'm like, oh, shit, I'm not sure how to tackle this. Who do I call? Boom, you come up. If I think of that chain, that feels like a direct line right to you. Well,
that's exactly right. We get a lot of calls that way. We've got this questionnaire from our bank. How do we fill this out? That sort of thing. And you get that on the climate-related financial disclosure side, like the kind of the capital E and ESG. Yeah. Typically, but it's also manifesting in a number of other ways. Since you and I last talked, companies in Canada of a certain size, mostly the mid-market and above, are now subject to the Modern Slavery Act reporting requirements, which is human rights, supply chain due diligence. So I think there was just over 6,000 organizations in Canada that were subject to those requirements. So we've been helping a number of clients with their reporting requirements there as well. But in a similar fashion to what we were just describing, it's supply chain legislation, right? So, organizations in many cases are required to go up and down their supply and value chains to determine, whether there's any instances of forced or child labor. So, in the same way that we have clients that are getting these questionnaires from financial institutions, likewise, lots of clients are getting questionnaires on the modern slavery front from, a lot of it comes from, like, if you have a big customer, as an example, like if you're in retail and you've got kind of one of the big box stores as a customer, they're all requesting or requiring this information from their supplier network. So we get a lot of those sorts of questions as well, which has been interesting. And I mean, the timing of all this is funny, right? Like we're talking about, you and I talking maybe just over a year ago, kind of thing. All of these things that we're talking about happened within the last 12 months. And then on top of that, I don't know if you want to move to Bill C-59.
Well, we can. I'm just curious about the Modern Slavery Act.
Yeah.
Obviously, I was involved in the International Justice Mission. I was a sponsor.
Yeah.
I was a spokesperson for them. So something that I know they were really pushing towards. So I heard it from that side, and obviously the need is catastrophic when you start to unpack what modern slavery actually looks like. And I think in Canada, we're very isolated or protected or head in the sand, not because intentionally, just because we don't see it on a global stage, the amount of people. Then I hear about it from, okay, it got pushed through. What are you seeing for the reality of one of those, like, okay, now that it actually is been passed, what is happening at a company level? Are you seeing changes? Are you hearing about incidents? And I just haven't seen it in the media for a while, but that might be just because I didn't see it.
Yeah, there was a real flurry of activity leading up to that May 31st.
As there often is.
Deadline, yeah. People coming in the door, and I mean, it wasn't as widely communicated, I guess, as I would have expected for something that impactful. So lots of companies, especially again,
it was a big deal because the impact that was not all just a light, something that passed, after hours in a dark room. Like that was a fairly high optics legislation.
For sure, absolutely. But you probably have this experience. I know I do. That I get on LinkedIn, and I think that's the way the world looks to everyone. But clearly you're subject to the algorithm.
Be careful of the echo chamber that you're yelling into or getting bounced back from.
Well, exactly. So I'm the same way. Like I'm surprised when people haven't have heard of this. But then if you think about it, if you're a manufacturer, a medium-sized manufacturer in northern Alberta or something like that, to be quite honest, sustainability and human rights due diligence is not top of your radar, and you're not following people in the media that are talking about these things. And so it's
you're too busy running your business with all the things that you need to overcome on a regular basis, right?
That's exactly right. Yeah. That's exactly right. So we just back to your question, we saw a huge flurry of activity kind of leading up to that May 31st deadline, and then I think lots of organizations got somewhat burnt out just going through that cycle. So we saw kind of a dip, I would say, kind of through the end of spring and through the summer. But it's starting to pick up again, as with most things.
These things have cycles to them, right? And I get that for sure.
Yeah, for sure. But in terms of, the steps and activities that companies are taking, like this piece of legislation is transparency based. So really the only requirement is that you file a report, meet the requirements of the act, and you're not misleading or dishonest in that reporting, right? So that's it's a pretty low bar. And there's no actual prescriptive requirements in terms of you shall do this, that, or the other. Okay. So most companies really in this last reporting cycle, we're just trying to get their heads around, like, what does this act mean? Like, first of all, how does it apply to me? Because the other piece is it goes entity by, not to get too deep into the weeds, but it goes on an entity by entity basis. So if you have a company that has parents, subs, affiliates, you have to look at each one of those individually to see if they have their own reporting requirements. So I know lots of companies struggled with that. Like if you think of big, complex organizations, some of them will have hundreds of affiliated companies, right? Yeah. So you have to go look at each one, look at the financial statements, look at their activities, see are they caught by the act. So that's what most companies were doing, is just kind of getting their heads around, what does this mean? What do I need to do? But going forward, I think is where the real work will begin. Things like just risk assessments, risk mapping of your supply chain. Lots of organizations haven't undertaken that sort of exercise yet, and some are finding it to be a pretty large and daunting task. So we've been helping lots of.
There's almost like from a labor cost, effort, energy. It's an inflationary. It's almost a tax that you don't. I just think about the amount of reporting that we do now. We've had large national OEM or global OEM manufacturers, one of our major clients, and we've been with them for 10 years. Almost 15 years, actually. The amount of reports that started showing up, we want to report on your cyber, we want to report on your cyber insurance, we want to report on your accounting, and it's just like, wow, like 5 years ago, we weren't getting any of those. We weren't getting any of those requests from them. Just, sign the agreement, we're good, we all agreed, you have basic insurance coverage, done. That was it. The last 3 years, 2 years even, that is exponentially grown. And the amount of time it takes as a small organization, because you see it, you're like, wow, that's taking somebody like hours and hours of their week that a year ago, wasn't even on the table. And that's at a small level that I'm seeing it. At a large scale, like, it's daunting.
Yeah, no, for sure. And depending on, the industry or the segment of industry you're in, that can actually exacerbate that particular issue. And the cost part is something that I don't think has been widely discussed yet in Canada. But to your point, like, that's the next big thing, because if you start adding up all of the compliance costs, let's call it, including, the use of external advisors and making sure that your internal workforce is up to speed, and those that are responsible for activities that are subject to these new reporting requirements are aware of them. It sounds simple on paper sometimes, but when you actually get into the implementation, like, there's a lot there, and the cost is significant, especially when you think of the cumulative impact of, like, let's say you have a publicly traded company, so they're going to have these climate-related financial disclosure requirements. They probably have requirements relative to their lenders for OSFI B15. They're probably, if they're selling goods or importing goods, they're probably subject to the Modern Slavery Act requirements. And then you have this bill C15, which is, not C15, C59, which is the overarching kind of anti-greenwashing provisions that govern all of this, which is brand new for organizations. And then on top of that, there's a bunch of discrete.
Conor, I'm getting tired. My backpack is getting heavy. I feel like I'm putting more things over my shoulder that I got to carry around as a business, as shareholders, like, because it impacts everyone, right?
It does.
That cost of that just the cost it takes you to be in business, that combined with the amount of technology tools you have to pay for on a monthly basis now just to run your business effectively, is an interesting burden that we sometimes go, yeah, we need this. This is absolutely important, and it is. When you get into the impact of it, eventually that works its way to the consumer in whatever way that shows up, right?
I think that's right. I like the way you categorize that in terms of another additional incremental inflationary pressure. I think that's exactly right.
It's hard because you don't, at first you're like, no, absolutely, of course, because I'm not going to say I'm not behind this. Oftentimes you have to run that graph out, extrapolate it out to go, well, what is actually the impact, financial, time, opportunity, all those things. Talk to me about, Bill C59. Obviously that's a big one. That's, anti-greenwashing. People are like, well, hasn't that been around? Haven't we had that? Because it's a word, it's a term, I think, that's been around. Yeah. Now we're putting some teeth behind it. What does that even look like?
Yeah.
How sharp are the teeth? I guess maybe it's the first question.
They are very, very sharp. Let's just say that. Yeah, no, it's interesting because, I set my practice up going on 4 years ago now. And the whole genesis for it was helping companies prepare for mandatory climate-related financial disclosure. That's, I thought, was kind of, that would be the nexus, and that would be kind of the linchpin of the whole practice.
Well, it's good. You picked a niche, you picked a need, you picked a problem to solve, you focused on it, you went in, you specialized. Like, you checked the entrepreneur boxes of, like, I found a problem, I specialized in it, and I went for it.
Yeah.
But then reality showed up.
Well, that's right, and it was kind of funny because there's been several delays in the rollout of those mandatory requirements. And I mean, still, it's a bit uncertain as to when that will actually land and when the reporting requirements will hit for companies. But in the meantime, Bill C59 kind of came out, I won't say out of left field. There are anti-greenwashing regulations and legislation globally. I think, somewhere in the neighborhood of 30 to 40 countries either have anti-greenwashing legislation on the books or in the process of doing so. So it's not brand new globally, certainly. But, the point I'm making is, I actually thought that the mandatory reporting would be first, and then you'd on the back end have this kind of overarching regulation that kind of governed, the consumer protection side of things, which is what the Competition Act is doing. But those things have happened in reverse. So it's kind of interesting because, lots of these organizations are actually not subject to mandatory climate-related financial disclosure now. So lots of large companies, most I would say, have some sort of ESG or sustainability report. Mm-hmm. But what's happened with C59 and kind of the concern that's created in the market is many organizations have pulled their sustainability reporting and disclosure either in whole or in part.
That was kind of almost the immediate backlash of like, whoa, okay, now because of this, we're just going to say nothing kind of thing. It felt like that happened as almost a knee-jerk response or maybe an appropriate response.
Well, it's hard to say, right? Because there's still a lot of uncertainty as to how the act will be interpreted and implemented and enforced. So, and again, going back to some of my previous comments, we were moving very rapidly from a voluntary reporting environment to a heavily regulated one. Right, so lots of organizations were not prepared for that,
And a general lack of standardization in that process, right?
No, certainly. And I mean, we try to stay neutral as an advisor, right? Because we want to give objective advice to our clients and kind of give that broader perspective, and obviously focused on legal liability and risk.
Yeah, I'm coming to you because I want your opinion on my risk.
Yeah.
Ultimately, your lawyer's there to tell you what the risks are, and then you can get to decide whether you want to take that risk on or not. Hard for you to do when the playing field, where is the white line? Is it here or is it 2 inches over there?
Yeah.
Was the ball in or was the ball out? I don't know. Did you move the line in between?
Yeah, the line, as you say, it's certainly moved. It's just a matter of how far, and that's what we're still trying to help clients navigate. And there is a public consultation process that the Competition Bureau is undertaking up until September 27th here, so in another few weeks. They're accepting comments and feedback from the public. I suspect they're going to get thousands and thousands and thousands of submissions. Like, we have most of our significant clients are either submitting their own feedback or as part of an industry association or industry group. So the Bureau is going to get a ton of feedback.
Does that feedback look like, we don't agree, we think it should be like this makes no sense to us, you're actually being punitive to our industry by putting these in here without really understanding, or is it all those?
It's all of those things.
Okay.
It's such a spectrum. I mean, as you say, there was certainly a large backlash against the legislation when it came out, and in particular from certain industries and certain industry groups. You and I are Calgary based, obviously, so we're very familiar with the energy and oil and gas sector in particular. So there's been the very vocal, I think, opposition from many organizations in that sector, and it's interesting because depending on what the argument being made or the criticism being made is, there's varying levels, I think, of accuracy, I suppose, to some of the criticism. And the one thing that I do find interesting, people often kind of delve into the political side of things and what happens when the government changes, which is an interesting question given the events of over the last few days here with our
absolutely that ground might be even more unstable than it was 48 hours ago.
Exactly. So the federal government, what's going on there, but it is interesting when you think about it, because Bill C-59 is obviously geared towards kind of those loftier environmental issues. I mean, it applies more broadly than that, but I think that's really what it was focused on, are things like net zero goals, carbon neutral claims, that sort of thing that are out in the market that have the potential to, deceive consumers, or that's the allegation.
So I'm just curious, do you think we'll hold our own government accountable for some of their lofty goals? But
that's
you
exactly.
don't need to answer that question.
That's exactly where I was going, Tyler, with that.
Okay, all right. I could feel you. I'm like, what you're saying is, absolutely.
No, you read my mind, because if you think about it, like the federal government, they have a net zero pledge, which is basically where they're soliciting or trying to encourage companies to make net zero goals and pledges and lofty climate goals and ambitions and that sort of thing. And they've been doing that over the last number of years. So it's kind of interesting that you have that on the one hand, and then on the other hand, you have this very punitive legislation that requires basically immediate substantiation of those exact claims. So I won't say there's a disconnect. I try not to be hard or import humanistic characteristics.
This is an opinion-based conversation, so we're in a safe space that other people will listen to.
Yeah, no, for
you and
sure.
I having a beer is a different conversation. I appreciate that.
That's right.
Based on your role, but at the same time, these are the things that cause people to get frustrated, throw up their hands. It wears you down.
It does.
Speaking from business leaders and executive teams and boards, the more the unknown, the more you just want to look in another place, right?
Yeah.
Business does not like unknowns.
No. And I think we're in a bit of a transition period for sustainability disclosure here.
Is this also just part of the journey? Is this also just part of the due process that it takes to get this sorted at the speed that we try to do things, while simultaneously also being slow to change?
That's exactly right. And I think, I've been saying this to clients and in a number of my speaking engagements. I think the impact is very significant. I think it's quite profound. Like, I think this is a fundamental shift in how companies disclose public commitments relative to sustainability. I've been,
which at its core is not a bad thing. Like, just to say that out loud. But again, give them a scorecard to let them know where the line actually is. What are we agreeing to report to? It feels cart ahead of the horse, which you kind of implied, right?
Yeah. There's definitely a lot of that, and I mean, in this transition period, it's I've also been drawing the analogy between I can't remember if it's a 5 or 7 stages of grief, but like there is that analogy as well, and I think the sooner that organizations get to the acceptance phase, the better, because and again, I don't like to try to predict or discuss where the legislation will go, where the government will go, any of those sorts, because that's kind of a fool's
You don't
game.
have that. You don't have that crystal ball.
No, exactly. So, but what I do say is, going back to some of my prior comments, this type of legislation is not unique around the world, and whether or not you're caught by the Canadian legislation, if you're working internationally as an organization, you're going to be subject to it somewhere. So, regardless of what happens in Canada, it is almost an inevitability. So, the sooner that you can get your heads around it and start actually doing the work that's required, I think the better, because as I say, going back to the government side of things, who knows what happens like with our federal government in the election over the next 12 months or whatever the case may be, but based on what I see across industry, I would personally be surprised if we saw a new government, whether that's conservative or otherwise, make any sort of change in terms of repealing these provisions to the Competition Act. And the reason I say that is I'm just not sure there'd be the political will to do that. Like, we hear a lot about it here in the energy industry in Alberta, certainly, and it is a big deal, but you have to remember that these parties are going to be campaigning on promises, and I'm not sure that this even gets to the status of an election cycle style promise. So you play that forward, once whatever government gets into office, are they actually going to have the political will to go through and make these amendments, reversing what I think for many voters and many industries across Canada, weren't as significant, or they weren't significantly impacted as the energy industry has been. So
I think it was used a little bit that way, it feels, in kind of the last cycle, but it technically should be there should be a church and state from what we're doing from a climate, and like there's things that are just the way the world is headed versus blaming this party versus that party. And I think it's nice to think, well, if my party gets in, they'll throw all that out. That horse is already like, I don't think it even should be in that. But I think this is where a lot of this has gone sideways. This has become a politicized conversation, and it shouldn't have been.
Well, and that's the thing. And back to one of your comments, right? It's hard to be anti any of the objectives of these types of legislation. Like, it's hard to be anti forced or child labor, like in terms of the legislation. Right? I'm against forced and child labor legislation. Like, that's hard to say.
Pro-slavery doesn't track very well.
That's right. And same thing on the sustainability front. Yeah. Like, I'm okay with exaggerated or falsified environmental claims. Like, it's hard to say that.
Like, it's worth saying it out loud, though, right? It's worth just saying it to see how ridiculous it sounds. But also, what I am for is, let's look at this with an honest lens. Let's look at this from a perspective of this is going to take time, which gets away from the politically generated promises that get made, which maybe also frustrate a lot of people. People I know that get very frustrated because of that thing, but fundamentally they're not against better environmental stewardship. They're not.
Yeah, no, and I think you'll see that in some of the comments as well. Like, lots of organizations they say that to me. It's like, we're not against the intent, but what we're against is the manner in which this has been rolled out, with the lack of consultation, the lack of clarity around guidance, the quick timeline, all of those.
Something done with you versus done to you feels very different. Yeah. And again, back to the point of like, this is great to get fired up or frustrated, or to actually have legit financial challenges around this. Where the Bill C-59, you talked about the teeth, that's where things can get messy, where all of a sudden things get punitive. And before people have a chance to go, yeah, I'm frustrated by it, but I know this is going to take time. Is there a risk by putting something like that forward almost ahead of its time, that's where you get some real backlash, because people start getting punished for some of these things rather than collaborated with? Again, we're being very philosophical, it feels, all of a sudden, but it's hard not to go there.
Yeah, no, for sure. Like, I get the question. I get a lot of questions around the likelihood of enforcement and compliance consequences is, I think, kind of what you're getting at. And I try to stay away from that as well. Similar to politics, it's very hard to gauge or guesstimate, what a regulator may or may not do by way of enforcement. Like, what I've seen in the past is, when you have a new kind of big piece of legislation, I've seen regulators that will pick kind of test cases, in particular industries or topics that they think are important, and will send a message to the market. So, you may see some of that where, the Competition Bureau, for instance, they pick, X number of companies and X number of industries, and they decide, okay, we're going to advance a complaint through C-59 against those organizations. So you may see that.
Which really gets into setting precedent territory, right? Mm-hmm.
Yeah, that's right. I think, regardless of the type of approach, there will be an increasing enforcement profile. But to say like how that happens and to which organizations, I'm not exactly sure.
Fair enough. I guess my thought there is, that becomes very adversarial very quickly. And, if that happens we should still be collaborating, negotiations break down, thinking about it that way. But I'm thinking broad and specific at the same time.
Yeah, for sure. Sorry, Tyler, I just got to run to the washroom here, actually.
Oh, no worries, man. Yeah. We'll keep it rolling, and we'll just slice that out after.
Okay, sounds good. I'll be back in 2 minutes. I am back.
No worries, man. All right. We'll just pick up where we left off, and I'll slice that up in the mandatory reporting, Bill C-59. What else what else can we expect? What else are you seeing on the horizon? Maybe that's enough, and it's the evolution of that. But this thinking about how much has evolved since last time we chatted. If we were going to be talking a year from now, what might be coming up, or what's back to the crystal ball that you don't have? What are you seeing, or is it more just the working through what we've already got on our plate now?
Yeah, I think it's a bit of both. on the legislative front, as I mentioned, there's supposed to be kind of implementation guidance given by the Competition Bureau for Bill C-59. So I think that will have a pretty significant impact on organizations in terms of, do you take your disclosure down? How do you address future disclosure? That sort of thing, in terms of what the disclosure is itself. So that's certainly going to have a big impact. On the modern slavery side of things, that legislation continues. There's annual reporting requirements. We've also heard that the federal government is actually working on more stringent human rights supply chain due diligence legislation. So the current version of the Act basically requires transparency. So you just need to say what you have or haven't done as an organization to address forced or child labor in your supply chain.
Okay.
So that's the transparency side, but we understand they're working on a kind of an augmented piece of legislation as opposed to just saying, what have you or haven't you done as an organization? It will say, you shall do the following things, right? So back to your earlier question about, how does that impact organizations and the compliance cost? I expect if that new piece of legislation comes out, the compliance cost will go up significantly because, as an example, if you find an instance of forced or child labor in your supply chain, and we're talking, tier 3, tier 4 suppliers even, which may not be as obvious, but could have a critical impact on your operation, if you find one of those and the act says, as an example, you can no longer use that supplier, what do you do practically, right? So you have the issue of trying to find a new supplier, you have supply chain disruption, you have significant potential impact to your actual profitability. And then on top of that, you have, all of the internal resource constraints around the reporting itself, right? So you have to do the reporting, and then you need likely some sort of legal analysis that maybe you haven't undertaken before. And then beyond that, you need to set up, process, governance, controls to make sure that these things, are identified in your current, suite of suppliers, as an example, but going forward when you're selecting more suppliers, or even when you're entering into agreements with counterparties, these are all new risks for organizations that need to be assessed. So all of that put together is, I would say, a significant burden on organizations.
And almost always these businesses that you're engaging with are in other jurisdictions, other parts of the world, where there's no legal potential ramifications, and often those suppliers are supplying your competitors. Like it gets really messy really quickly.
Yeah.
From an auditing, like, if I found a black spot here, and I go, oh, geez, what's going on? I'm thinking about the audit process. If someone looks through your books and they find an anomaly, well, the spider web starts growing really quickly. Thinking about it from a global supply chain perspective, it's large, but it's very interconnected, isn't it?
Yeah, no, absolutely. And then, it's the unknown as well, right? Because, we talk mostly about climate-related financial disclosure, which I think is what C59 is mostly intended to address. And then we do have, on the social side, this Modern Slavery Act, which, again, the modern slavery piece, I was actually surprised that for most organizations, that's the first form of mandatory reporting, when, again, it's not really top of mind for a lot of organizations. So I just use that as an example of there's probably things that the government is working on that are going to be somewhat of a surprise, right? Both of that kind of big bucket variety that has a wide impact, but also very discrete regulations. Like there's the plastics registry, there's a whole number of very specific and discrete, mostly environmental, but reporting requirements, I think, that are going to take hold here over the next number of years.
When you think of even ES&G, in Calgary specifically, or Western Canada, a lot of the conversations I have seem to more delve or camp out around the E, where when I hear the modern slavery bill, that sits clearly in the S. Just thinking about even how those three letters, it's funny to break it down that way. Well, which are you in the E bucket, the S bucket? But it's interesting to see a little bit more or something like that come to the forefront, that it wasn't the environmental, just seems to be the conversation that I have had more often here in Western Canada.
Yeah, no, that's exactly right. And I expect that to dominate the conversation going forward. And again, what we try to give advice to clients on is the opportunity side. I know this sounds consultancy, certainly, but like we do legitimately try and look at the opportunity in all of this. And the ironic or very interesting part is the fact that, I often heard prior to Bill C-59 in particular, that there's such an opportunity to differentiate in the market based on your environmental performance and disclosure, right? I heard that all the time, like, oh, we need to have ESG.
You're going right into where I'm like, so let's talk about from a messaging and actual value proposition perspective of what this is. Is it just another thing you have to do, or does it actually give you a differentiator in the market?
Well, yeah, the ironic part of all of that is people said that all of the time. I heard that almost on a daily basis for the last 10 years. Like, oh, we need to get an ESG report so that we can, differentiate ourselves or, provide some sort of competitive advantage. The fact was there was absolutely no competitive advantage up until Bill C-59 came into effect.
Interesting.
Because everyone was saying these things, right? Without substantiation. I don't want to paint everyone with the same brush. There's varying levels of, I think, accuracy to sustainability reporting and verifiability. But that being said, there was no market differentiation because everyone was basically saying the same thing. Oh, we're net zero by 2030. We're net zero by 2050. We're going to reduce.
And even the metrics that they were reporting on, even in the same industry, would vary, right?
That's exactly right. So interestingly, C-59, I don't know if this was the intended consequence, but it actually will allow organizations that have done their homework and can actually verify and substantiate their environmental and social sustainability claims. It actually will provide a differentiator. Right? Because if you can go out to the market and you can confidently say these things and demonstrate them, where others now can't because they're afraid of these massive penalties that can be levied, that actually is a differentiator.
That's an interesting way to look at it.
Yeah.
But it actually, if you say it now, you're saying it knowing there's consequences. So does the market, or does the your stakeholders, whoever they are, shareholders right through to customers, do they go, oh well, if you're saying it now, I know it's true, versus again I hear it, right?
Yeah.
There it is again. And that's been floating around forever. Like, just the idea of greenwashing has been around for a long time. Like, this isn't a last couple year phenomenon.
Yeah, no, for sure. And
Just not just difference from the ESG. Like, oh yeah, we're being good for but we're doing good for the environment, versus putting out an ESG report, which maybe is been the last 5 years. That's really kind of been more popular, if that's a way to say it.
Yeah, it's certainly hit the mainstream. I mean, corporate social responsibility has been around for 20
right. It's just
years.
it's also just a different acronym too, right?
Yeah. And I honestly don't know how long ESG will be around necessarily. Like, it's one of those things too that it might just become part of a business's operation inherently going forward. And I've heard that before too.
Yeah, businesses don't brag about having trustworthy financials.
Yeah,
it's expected. And is that the best comparison to draw?
I think so. Yeah, like I draw the analogy between, and I can't remember if I've mentioned this yet on this podcast, but the Sarbanes-Oxley Act, right?
I think we might have talked about it briefly the last time, and it's come up before. But yeah.
Okay. Yeah. I mean, that had a profound impact on financial and securities disclosure and the compliance costs that we already talked about. Very significant there.
But the goal was standardization, and the goal was to be able to look in with a universal sense of trust from the outside, right? Ultimately.
That's exactly right. And I think there's kind of those same objectives here with Bill C-59, although I would say that the impact and the reach is more significant with Bill C-59. And the reason I say that is because it doesn't apply only to publicly traded companies, right? It applies to any company making any representation. And it also applies to, extraterritorial organizations that are making representations in Canada, or vice versa. If you have a Canadian-based company, like mining as an example, there's lots of Canadian-based companies that have operations around the world. If you're making representations about those operations, those are also caught too, right? So that's a huge scope of potential organizations and types of representations that may be caught. So that's one thing. The other piece is huge penalties associated with it, potentially. And then also on top of that, there's the uncertainty around all of the implementation. So, when you think of those things cumulatively, like that's a massive impact. And again, I think it'll be larger than Sarbanes-Oxley for sure.
Are we going to see? This is a random question. Are we going to see people hauled out of their office in handcuffs? Like we might, and I'll say in the U.S. Maybe we don't do that as much in Canada with our white collar financial crime, but in the U.S. people do get dragged in front of the cameras with handcuffs on, right? With their suit jacket over to make it look like they're not wearing handcuffs, or maybe I've watched too many movies. Is this going to end up in somewhere similar? And maybe we're talking about a sci-fi future, but maybe not.
Well, there are increasing trends towards personal liability, particularly at the board level. Like as an example, the Modern Slavery Act has a requirement that the board of directors attest, basically attesting to
sign off that this is true.
Yeah, the accuracy of the report of their organization, and they're personally subject to significant penalties. So there's certainly a trend that way in terms of creating that legislative liability for people in their individual capacities. So that's the trend. To your question, whether or not they'll be hauled off in handcuffs or not, I mean, I've been doing this for about 20 years. I think there's twice where I've seen regulators kind of show up with demonstrations of force, potentially, like showing up with sidearms and that sort of thing, and executing search warrants and that sort of thing. So I've seen it on very rare occasions. I mean, Canadian regulators and police, not to be stereotypical, but I think they typically take a less, I don't want to use the word brash, but a less show of force type approach. So I don't know if we're going to see like personal arrests. Like I think, and based on what I've seen, normally those are reserved for like intentional malfeasance. So if we do see something like that, I'm not ruling it out. But based on what I see for C-59 in particular right now, I don't see a lot or really any instances of intentionality where you'd have like an executive say, I know that we're doing this thing that's against the law, but we're going to report this thing completely differently. Like I don't see that. It's more a matter of some of the claims are vague, or you don't have as robust data as you might need or expect. So those types of issues are much different than intentional and willful.
Yeah, the Hollywood version is the company that's knowingly using a supplier in South Asia who's using child slavery and covers it up and pretends. And I think there's been movie plots of exactly that kind of theme for sure. Yeah.
You're right, and that actually, as you describe it, is one scenario where I could see the potential for malfeasance potentially. Like going back to like if you're a manufacturer and your whole supply chain is reliant on a conflicted area or jurisdiction or product, right? And you find out, like let's say a year from now, you have this new legislation, you actually find out like 70% of your entire operation is directly reliant on child or forced labor, even if it's a tier 3 or tier 4 supplier. I think there is the potential there. You create a scenario where certain people in high pressure situations like that might make a bad decision and might report that inaccurately or maybe gloss over it or not do what's actually required. So those situations I could see.
It gets sticky, especially in that one, because there's that feels more black and white in the concept of like there is no gray area. It's wrong, it's terrible, no one's going to say otherwise. Mm-hmm. But yet we have a business that's reliant, and I've got X amount of staff. Like I turn that supplier off and my whole business fails tomorrow. Like it gets messy really, really quickly. So I have a grace period to make these changes of yes, I've identified it, I'm working towards it, but an overnight change puts hundreds of people at a job, at a work here. Like the impact gets very, it becomes less idealistic and more like, okay, what's reality of these situations? And at least we're talking about them, at least we're focusing on them. I think that's a win.
For sure.
Versus let's just pretend that's not going on over there. What gets you the most excited about the journey? You've been in this, you said 20 years working in this space, environmental lawyer. Before it was cool, I will say jokingly, of course. What gets you the most jazzed up? Obviously, you've got to wake up every day and tackle the unknowns and give advice about it.
Yeah, no, it's funny. I mean, we're at KPMG now, like a large, internationally recognized, well-respected organization. But our team specifically, we're still very entrepreneurial. This is brand new subject matter, and things just come up every day. Like the things we've discussed on this podcast, that's my day to day, right? It's like what's new, what's going on. Every day I come into the office, there's some sort of new challenge and discrete issue to tackle. So that's what keeps me excited is just building and continuing to do the work that we do. And not to be too kumbaya or socially sappy about it, but I mean, I like to think that we're, in some small way making a difference, right? Like, it is kind of a cool feeling to help organizations kind of be the best versions of themselves. And going back again, I don't see much, if any, intentionality. It's just more a lack of.
I appreciate that. Yeah. You're not seeing malice.
No, it's just it's a new reality, and it's just bringing that awareness and helping organizations navigate through it. And at the end of the day, if a client says to us like, this is really cool and we feel good about this and our employees are behind this, whatever sustainability initiative it is that we're helping them with or risk that we're mitigating, that's a cool thing, right? Like that's something I can hopefully tell my kids and grandkids, and they'll be proud of me for doing, I hope.
Well, I love what you said there. Oftentimes we look at our brands and our messages as these outward facing to the world. Our first audience is always our team, our employees, the people that work with us every day. And if they can get behind the idea, that in itself is a win. Totally. Not that your customers will or won't care, but to your point about, everyone's been saying it. But if you work inside a company, you see it and they're making things, and if they're not, right? To a certain extent, you're like, that's a great message we put on that billboard, but are we really doing that? I've had those conversations like, is that for a different, because that's not us. I'm like, that's no good. This audience is always your internal team. And I will give you some props, man, from the outside. There's many avenues you could have gone down when you chose law. You chose environmental. So to say that you believe you're having impact, there's lots of other avenues. You could have do tax. You could have done a whole myriad of things, and you chose this for a reason. And it seemed, and then the world and everything kind of shifted back to your point about, a lot of hard work and timing doesn't hurt, right? So kudos.
Thanks very much, Tyler. Yeah.
No, and I love the content you put out to the world, so please keep it up. If someone is LinkedIn your preferred, well, I was giving you props today, Mr. 22,000 followers on LinkedIn. So clearly, LinkedIn is a popular platform for you, my friend.
Yeah, it's funny. My sister.
One might think you put out good content.
Yeah. Well, it's kind of funny because my sister, she runs a business on social media as well, like a fitness type business, and she has tons and tons of followers. And I tell her about LinkedIn, and she's like, why are you telling me this, you nerd? Like, no one cares.
Oh, those of us who do care about LinkedIn do. LinkedIn, I still think it's the one social media platform that still has some threads of credibility. Where some of the others, I don't know. I don't feel guilty after spending time with LinkedIn. I often feel a little bit like, oh, there's 10 minutes of my life I can't get back. But let's not get into a diatribe about social media platforms.
For sure, yeah, absolutely.
But so obviously, if someone wants to reach out, LinkedIn seems like a pretty good place for you.
Absolutely, yeah. Myself and my team, we're on there every day. It's just it's a great tool too, right? Keeps us up to speed on everything that's going on around the world. So, but yeah, if anyone ever wants to get a hold of me, I'm typically online for some portion of the day on LinkedIn.
Nice.
Yep.
And got any speaking gigs? 'Cause I know you're very prolific out there on the circuit. We're getting into event season again, which feels like it hardly goes away anymore now.
Yeah. I said when I made the move to KPMG, I was going to try to cut back on the speaking, but just the way that things have gone, it's gone.
It's such a great way to get out there and to speak and have influence. It's very time consuming, and it fills you up, but also is exhausting. I do a lot of speaking, and I'll say yes to something, and then all of a sudden it'll be a week out. I'm like, oh shit, I gotta get wrapped up. I'm like, why did I say yes? Like, there's always that little cycle I go through every time. It feels like.
Oh no, I know. But afterwards, I don't know if you have this experience. I do find it like energizing, right?
Oh,
especially
it's
when
like
you
a little high all to itself.
Totally.
Yeah, I completely agree. I love a room of engaged people with the message you're passionate about. Like that's, and I've seen a lot of the things you're out there doing. So anything lined up? Like is there anything that's public or that people might want to check out?
Yeah, no, absolutely. I have a whole bunch of different speaking engagements lined up.
This is me blatantly promoting your upcoming events.
No, I appreciate it. Yeah, no, there's a number here. I'm speaking to the Canadian Bar Association Natural Resource Section at the Petroleum Club in a couple of weeks. CREN the week following here in Calgary. And then I have a big event. I'm keynote speaking at the Key Media ESG Summit in Toronto.
Which I saw is becoming one of the big. Yeah, I saw that was on some of your past content. I think you were at that last year and you made some comments about it.
Yeah, for sure. So it's good. Yeah, we've got a full slate heading into the fall here, and with the C59 stuff, it seems like we get a new request pretty much every day, either for a private event or a public speaking engagement, that sort of thing. So,
well, and from a marketing, biz dev, growth perspective, like putting yourself out there and becoming recognized, like for anyone in any professional service, specifically, going to an event is one thing. Participating and showing up at the event, there's no better way to get what you care about in front of people to go, hey, I also care about that. Can we talk? Like, it's a fantastic way to do it, and it can be very natural if it's just part of who you are, right?
Yeah, well, I talked to my team about that too, right? Because we all come from different backgrounds and perspectives, in-house and in consulting as well. But it's always kind of a funny thing. The whole marketing and business development, it's not a natural thing, right? Like no matter how long you do it, it's still, there's something to it, and it's a real art. And we try to really be intentional about that and not, and this sounds cliche too, but just not be salesy about it at all, right?
I don't want to be salesy. Well, then don't be salesy.
Yeah.
Like people say, well, I don't want to come off as salesy. I'm like, putting something out there that someone else can find value in, that's not salesy.
Yeah.
Being a winks and gun sales guy, that's salesy.
Yeah.
Don't be like that. But sharing something that other people value. And we tell ourselves stories. I don't want to look like a used car salesman. I'm like, well, you're not, so don't worry about it.
Yeah. Well,
I think there's a lot of stereotypes that focus on the sales guy, but when you're putting out something content rich like this that is top of mind and is important to people, and now I'm a marketer, I'm truly spinning it. You're actually doing a service, I think. You got to spin it the other way in my mind.
Well, that, and I mean, at the end of the day, this is our job, this is our vocation, right? And just, people, I think if you're upfront with them, say like, this is what I do for a living, right? Like this is how we can help or not, and just giving them that awareness and the idea that there is some capacity for us to help and just not pushing it. Like I think it's typically pretty well received, and in the consulting industry as well. I mean, regardless of where you are, especially here in Calgary, it's a pretty tight-knit community. So we try to be, provide some reciprocity as well to other service providers and other organizations. Just recognizing like there's lots of work to go around here in this space for sure, and we're trying to build a brand and a reputation in the market. So. To the extent we can help other organizations as well, we try to do that wherever and whenever we can.
The rising tides. Yeah, there's a joke. I'll say it just because there was a time probably that it would only be other lawyers who'd want to hear other lawyers speak. But we've moved on from that.
Thank God. Yeah.
So I was like, is that an appropriate joke? I don't know. We're right at the end. So if anyone's listening, this is more just you and I having a chat at this point.
Yeah.
Conor, thanks for coming on, man. I appreciate the update. I appreciate the perspective. We're specific, but also a little bit philosophical, because I think that's just where this will continue to unfold. And if the opportunity is there, I have a sinking feeling we will chat again.
That sounds wonderful. Thanks so much, Tyler. Really appreciate it. Really appreciate your content as well.
Thank you.
Been watching you and Jeff there going back and forth a couple times there.
Yes,
recently.
well, that was some fun recently to be on the other side of the microphone.
Yeah, totally. But yeah, that was excellent. And again, thanks so much for having me. Really appreciate it.
My pleasure, man. Thank you.